Alright, just want to give a quick update. I didn't get to this in time, but what I did want to do was actually, let's see here, take a partial profit, because we did break that previous high. I wanted to do it because I knew as soon as we break that high, I wanted to take a partial profit just to pay myself a little bit, right? So I only want to take a little bit. I'm going to take about a third of it, right? Close position. Right, take some profit. It should have been way more up here, to be honest, but as you can see, what I was talking about with this trade, it did at least come up to the bodies of the previous high. So this is good news, right, for this trade. I should have waited a little bit longer before I took that profit, as it came down, it bounced off of what would have been you know, the mitigation area again, right? So but you know, to be honest, it could have came down here, and then you know, it could have came down a little bit further, so that's why I wanted to take it then. But I cut it away, and it still can, to be honest, it still can pull down this way, and you know, get a little bit lower before we see it return back. But as you can see, everything I've, you know, what I talked about, especially when it got down to 71.1%, I was saying this, you're seeing all the signs of a smart money buy pull, you know, come out to fruition, and you know, it's coming true. And to be honest, whenever you do have, you know, a trade like this happen, your first target is the 100% of you know, the Fibonacci, if you have a Fibonacci pool. I always have a Fibonacci pool just so I can see where that 100% is, and I usually use that as my first target. So we did reach our first target. Unfortunately, I didn't get to my computer in time enough to you know, show you how to do it myself or whatever. But you know, did take partial profit. If you're playing with low lots and you don't have, you know, you're only doing a 0.01 or whatever, and that's all you got, close it out there. I mean, that's a good trade. I mean, we went from I mean, 734 to 742. You know, is where we're at now, or where it was when we took it. So that's I mean, that's a good, I mean, and here's the thing with trading, especially trading CFDs, you don't have to invest $734 to make $6 whenever it goes up the $6 that it did in Ethereum. You only have to invest 10 cents. That's all you have to invest. All you have to invest is 10 cents. Have an account of about $100, and whenever it goes up $6, you make $6. So that is why I trade CFDs. It makes way more sense to me. You make way more money, way quicker, less account, less hassle. But you have to know how to play the game, and this is how you play the game. All right. So that was a quick update for this. This will be for part 3. Part 1 should be uploading anytime soon, being getting ready to play. Part 2 is recorded, and then this will be part of part 3, and I'll continue with more on part 3 later. All right, thanks a lot, and oh yeah, don't forget to hit that like button, subscribe, do all that cool stuff. You know, that'd be great. All right, thanks guys. Have a good one, and Happy New Year, and Merry Christmas, and happy trading, and wear your pants. Alright, so still on part 3. By now, if you were somebody in this trade, you should have definitely taken a take profit, right? If you were somebody who had just put one trade in at the perfect time, right? You know, right now, take profit. That's what I would say. Because what you would have gained, right? If you to put in where I put in, right? at 15, yeah. So even if you're putting in a point, 10, like I said, a .01 lot, um, it would be $15. That would, and if you have a small account of just $100, you're just getting started and you're just not figuring this out. That's 15% on your account that you had just made. And what I want to do is the reason I wanted to pull this up is that since this is going up high, I wanted to show where take profit 2 is going to be, and the very final take profit. So even though it's showing here, I don't know why it's showing here, but I changed it to 759.57, and the reason I changed it to 759.57 is that's because that's 162%. If we look at the 162%, these are your take profit levels, right? If you don't have these set, please have these set in your Fibonacci. Your 127%, your 162%. What I do is I actually make them negative, right? I make them negative 0.27, 0.262, so that way whenever I pull the Fibonacci, it actually does the extension for me. That way I don't have to go back and measure it upside down. That way the extension shows the other way. Because you could do, 127, 1.27, and it actually give you the same thing if you were to flip it. But instead, I set my fib where it is. Let me just show you. So, here, this is how I have my fib set, right? So, 0.075, 0.5, 0.618, and then I go negative 0.62, negative 1.27, negative 0.27, negative 1, negative 1.62, negative 0.27. So, these are your extensions that you want to take profits at, right? If you have a way to set those, or if you set multiple, so what some people do is they'll have 5 or 6 entries set at the same spot, and then they'll have different take profits along the way. That way they don't even have to watch the trade. They can just let it go, and as soon as it hits take profit, one of those will get taken away, and then the next one will go. That way you don't have to manually do it yourself. But the reason I wanted to try to stay on here was because I wanted to try to see if, while I was on here, it went ahead and hit this 127, right? Because that 127 is going to be right at that bearish order block. I have a feeling it's, right now what it's doing is I talk about liquidity a lot, right? And it reaching liquidity and drawing backwards after hitting liquidity. Well, that's what it's doing right now. So if we take a look at this line here, for instance, and we draw it straight across, it's pretty much exactly right at where it got to. So it got above, right, this area right here. So those equal highs right there, a little bit of liquidity. It's drawing above that, pulls those, right? All of these highs, right? So that was a high, pulled above that, grabbed that liquidity, came back down, right? So in case you had a buy stop, right? Those things I keep talking about. So I'm going to show you these, Okay, people are thinking, oh my God, it's going to take off, it's going to rocket from here, and it's going to, come back, or maybe they'll set it a little bit above it. That way when it that way when it does come back, it just hits the top of that, right? So then they get tripped into this buy stop, and then it pulls back, and it doesn't actually use this as the support. That's not the support. The support is going to be this zone, right? The last down push. That's where your support is going to be, and that's what happened, right? It came down, it found that area, turned around, went the other way, right? And now it found the next liquidity area. What was that next liquidity area? Right above these highs. So it found that area, it pulled back. I'm sure if we came to the 1 minute, it's doing the same thing, right? Price is fractal. Pulled back a little bit, came up, then pulled back down, hit those mitigation areas. Now it's pushing up even higher. I'm just waiting to see if it's going to hit that 127, because if it does hit that 127, I want to be able to take a partial profit live here while I'm recording this. But I also I don't want to sit here and wait forever either. So what I'm going to do is I am just going to take a partial profit really quick. We're going to take 5 more off. Right, so we're going to take 5, close position. Right, so we're just going to assume it got to that 127, right? So now we have taken even more, right? So now if we look at the paper trading, we can see the profit that we have made, right, off those taking those 2, and that's just putting in. And I still don't understand exactly how the paper trading works, because with with what I had put in, I think I put in 16 total. I know that's not total lots, because lots is like $10 a pip, and that would actually be thousands of dollars right now if I were to put in that much money into this trade. But so I put in 16 total. I don't know what that means. If that's 0.16. I think that's what that would mean. It would be 0.16, which would be basically $1.60 per pip is what that would be. So, and $1 is basically 100 pips. So. No, that wouldn't be. I don't see. So I'm trying to do the math. I don't exactly know how the trading works with the papers trading, especially when it comes to these numbers in crypto. But I know on my MetaTrader 4, and I'll show this on my next one. I'll show you a snippet. I'm not going to show you my whole profit, but I did throw some. What you call momentum lots, right? So I threw some small size momentum lots in there, just so you basically you just add on. You're gaining a little profit as it keeps going up, basically. So I did throw on some momentum lots. It's a I'll just show you in the next video. But this is part 2 of what will be part 3. And then I guess the end of part 3, we'll just see if we actually made it above this high or not. Now, at this point, what you want to do, especially what I want to do, is now that you have made this type of profit, you don't want to lose it. So now what you also want to do is change your stop loss, right? You have made it this high above. I don't think. Usually what you want to do is put your stop loss right at break even. I wish I would have got in right at the beginning. Unfortunately I didn't, so I am going to put it at right at break even, which is 734.33. So we are going to put our stop loss at 734.33. So now we are risk free. We are running risk free, right? Is what that means. So now if the price decides to come back and go directly down and go right through our stop loss, guess what? We've already made profit number 1, right? Profit number 2, right? Now we're just waiting to hit profit number 3. And once it hits profit, to take profit 3, it's going to automatically exit the trade, and we will have made our money. If not, we don't have to worry about anything. This is the beauty of knowing how to trade smart money, and I love it. I love it. This is what I do every day, and I find generally I'm at work when I'm doing this, and I explain what I do. Sometimes I'm like my forex trades, but I never get a good trade like this that happens that I can record, because I'm always out and about doing something. This one just happened to just fall right in my lap, right when I was expecting it. I was watching Ethereum, when I was thinking about when I should get in and what would happen, I watched for all the right signs, right? Again, you know, it went down through. Let me just go through the motions again. If you didn't catch it earlier, I saw the low level liquidity, the high level liquidity, right? And I thought it would probably, you know, break the. I wanted to see if it was going to break the low level liquidity first. It did, right? Broke the low level liquidity, right? Then we broke a high after that. We hadn't broke any more lows. We broke another high, right? And then we broke another high. So there we had 4 consecutive highs broken. This is telling me the price wants to go up. The price is drawing towards this area of liquidity, is what this is telling me. So, therefore, when it retraced down to here, I was thinking this was a good place to enter because I saw the areas of mitigation, or the areas of, you know, where it pushed down to where it was going to go up. And I thought it was a good place to enter. And then it retraced back a lot farther. And it retraced back to exactly where I would want it to normally be, right? If I had drawn out everything and done everything from spotless, it would have been, you know, I would have entered exactly where I wanted to, which is probably, actually, I entered a little bit lower than this. Like I said, I entered higher than this first in my first video. Second video, I show you that I entered below that, and I averaged it out. So I'm exactly where I want to be. Now we are risk-free. We can just let this trade run as much as we want, and we don't have to worry about it. So there we go. There's part 2 of part 3. Maybe I'll just go ahead and upload this. I'm not for sure. You know, just to show you guys. I probably will, to be honest. I think this is good enough information for everybody to understand what's going on. And just to note, if you are watching out for Ethereum, watch for it to get above this this area right here, right, which is going to be around the 757 area. I'm going to say around the 759, probably even higher, right? So whenever you draw these fibs out, again, these 127, these 162s, these double extensions, they are probably going to have some kind of what's the word I'm looking for? I want to say cohesion, but I know it's not confluence. They're going to have some kind of confluence usually with what is already on the chart. And as you can see, the 162 level is right at that previous high, right? It's above the liquidity point. It's right at that previous high. That tells me it's probably wanting to reach for that 162. Now, these are things that have all been taught to me, right, by Inner Circle Trader, right? I'm just taking everything that's been put on charts before, that Inner Circle Trader teaches, and I am just putting them to life and showing you how they work. Basically, is all I'm doing. That's all I'm doing. I'm not trying to steal from anybody that has already, you know, I'm not trying to say that this is made up by me. I'm definitely not trying to do that. You know, this is how smart money works. And if you follow anybody that tries to teach smart money, you know, anybody that would probably see this would probably tell you that this is probably the perfect example that you could probably, or a really good, I wouldn't say the perfect example, but a really good example of how smart money works, and when to enter, when to exit, things like that nature, what to look for, yada yada yada. I'm not saying I'm the poster boy of smart money whatsoever, because I'm definitely not. But it is what I do follow because it makes the most sense. It provides a narrative to trading. It doesn't just say price goes here and this is what it does, you know. And actually it lets me know, you know, I can look for things in a chart and say, oh, okay, that now I understand, you know, because people have their, you know, their either their sell limit set here or their buy stop set here. Oh, that's a normal place, you know, where people would do that. And, oh yeah, that would be a normal place to do that. So that's an area of liquidity. Oh, so price is drawn toward those areas. Why are they drawn toward those areas? Oh, so it can trigger the market into releasing money into the market. Oh, that makes sense. You know, like the smart money provides that narrative as to where regular, you know, in any kind of technical analysis doesn't provide that narrative. It doesn't teach you where liquidity is. It just teaches you support and resistance, you know, follow trend lines, things like that. I don't believe in that crap. Don't fall for trend lines one bit. If you do, you're going to fail. You know why? Because trend lines are also going to be an area of liquidity to where it's going to go down through them, because people are buying in those areas on trend lines. So it's going to follow that down through them, and you're going to lose. It's happened to me many times. Okay? So, if anything can happen from these past 3 videos that I've just put out, please take this one into huge consideration, you know, as to, you know, researching and developing your own trading mechanism that should be based around the smart money theory. You know, look for people who are teaching smart money. Again, my go-to, supposedly the godfather of smart money, the person who invented all of this, or who thought of all this, who spent 20 years of his life developing this kind of theory, was Michael Huddiston of the Inner Circle Trader. But there are others out there who incorporate Wyckoff into smart money, which I think is a really cool idea. You know, that helps too, because, you know, Wyckoff kind of has this, you know, different way of doing things too. You know, you can kind of see, you know, last point of support and you know, and first point of support, and automatic rally and the springs and whatnot, and it can kind of give you a narrative as well. But you know, that's like in an accumulation phase, like we're seeing here, right? And it teaches you how to trade in these kind of accumulation phases, right? And so does smart money. I mean, you know, so anyways, that's what I got. I'm gonna go ahead and just go ahead and upload this video along with the first part of this video, where I showed, you know, taking the take profit 1, which right around here, and now we have take profit 2, right? And then you should have a take profit 3, and then also, if you get to this point, make sure you set your stop loss. Thanks a lot, guys. Again, if you don't forget, please press that like button, hit that subscribe button. It'd be great to get this information out to people who really need it. That thing was actually bashing my head, wasn't it? That was kind of cool. But yeah, people that want to learn how to trade, especially in the crypto market. Again, this is all theory that has been primarily set up in the foreign exchange market. The GBP USD, the GBP JPY, you know, the euro versus the yen, the odd, you know, versus the New Zealand dollar. That's where all this is kind of thought up. But guess what? It works in the crypto market too. You know, they both work off the same principles. That's what this whole past week of my videos have been about, right? And I'm just passionate about it. You know, I'm really passionate about trading and learning and seeing and actually seeing how this played out. Because I knew this was going to play out the way I wanted it to. I'm just glad it did, and I'm glad I was able to catch it and was able to record it here, because like I said, I'm usually at work when all this stuff happens, so I'm never able to catch it. So more videos to be coming soon of hopefully me catching trades like this, and we'll see what happens. And that's why you always see me marking out areas of liquidity, you know, in my other videos. You know, when I go back and forth to different pairs and whatnot, and I'll say, you know, here's an area of liquidity, here's an area of liquidity, look for these areas, because then this is what happens, right? And this is how you catch those trades. You look for those areas of liquidity, and you play off of them, and you play off the, you know, the order blocks, or what I call, you know, the displacement areas, the big push areas. You know, you play off those. Once I return back to them, then you buy. You know, all of this comes to play. There's a reason I sit here and I talk about this, and I have so many videos on this. Okay, so again, thanks again for watching. Happy New Year, everybody. I hope your year was just as prosperous as mine. Give me just 1 minute, and I will actually be putting up, you know, what a momentum lot looks like, and how much you can make just off of very little in trading a CFD. But for now, I'm just going to shut this off. Should be back in just 1 second. Thank you. Alright, so I said I'd be back with just showing you how much you can make with just very little. I'm going to transition over to that. I'm going to throw that graphic on right now. Right, so these are just three momentum lots that I threw in there. Like I said, I didn't want to show you everything that I threw in Ethereum, but I threw three small ones at various different, times during this trade. And from it went from 730. Let's go with the top 738 to 2.82. I only threw in zero point zero 0.01 lot, which was 10 cents per pip, right? So it went up from 738.82 to 739.53. That's about 71 cents, right? Or 70 something cents. So that's how much I made, was 71 cents. So for basically every penny that you trade, or every penny that you risk is how much it goes up, right? So here's the same thing, 734.79 to 736.51. Almost $2, so made $1.72. Third one here, 741.84, went up to 742.401, and that's at 0.27. Again, these were just momentum lots that I threw in there really quick, and exited out just to add a little bit more to the board, I guess you could say. But that's all it was, So, anyways, that's it for me, and let's keep doing what we do and make money out there. Like I said, right now the price is at 47. And what I could have done is I could have left all these in there if I want to. Believe me, there's still more in there. But again, these are just momentum lots that I threw in there. So momentum lots are just, little bits to pick up, as you're going along. So it's just a style I have. Everybody has their own style. But believe me, there is more than .01s out there floating around that I have in this trade. And they've, they start at 734 and they go all the way up to, so far 747. So if you can imagine what that's like, then this is the way to go. This is all through MT4. So anyways, just wanted to bring that to your attention to anybody that doesn't understand how to trade crypto through MetaTrader 4 or through CFDs. This is how it's done. It's not done through Coinbase. It's not done through anything like that. That's all I got. Thanks a lot for watching my videos, and still waiting to see if this is going to crack 759. Right now it's at 747, but we shall see. And Happy New Year, guys. Happy New Year. Seriously, I hope everybody has a very prosperous New Year. Any advice or information on this website is general advice only. It does not take into account your personal circumstances. Please do not trade or invest based solely on this information. By viewing any material or using the information within this site, you agree that it is general education material, and you will not hold any person or entity responsible for loss or damages resulting from the content or general advice provided here by bodies and wicks. Its employees, directors, or fellow members, futures, options, and spot currency trading have large potential rewards, but also large potential risk. You must be aware of the risk and be willing to accept them in order to invest in the futures and options markets, as well as forex. Don't trade with money you can't afford to lose. This website is neither a solicitation nor an offer to buy, sell, trade futures, spot forex, CFDs, options, or other financial products. No representation is being made that any account will or is likely to achieve profits or losses similar to those discussed in any material on this website. The past performance of any trading system or methodology is not necessarily indicative of future results.